right here is a moment. If you were long, if you were bullish and just got long using a trigger of a laser going green to red, which is bullish, and you bought it using the red dash line as support, which is often good support. You have one, two, three, four red lasers, which means somewhere right in here, some shorts came in. Seems to be one short. And he flipped the laser green to red, which means we went from more longs being in the market over the last 2 minutes to more shorts being in the market over the last 2 minutes, which is generally bullish because more shorts equal more buyers, future buyers. We're always looking for future buyers and sellers. It's the only way we're going to predict future price. And that's what traders and investors do, trying to predict future price. So take a look at another thing that was really interesting. Look at the chaser. The chaser here showed what you'd want to see for price to go up. What? You see kind of a choppy gray profile, essentially. And then you see a nice clean bell curve. That's bullish. It's bullish if it remains that way. Why? Because as soon as you get through this selling, you got some air. Through this selling, you got some air. All right. That's bullish. But it's not bullish if it doesn't remain, if it doesn't continue to look like that, or if this gets choppy. And I often joke around, it's like a driving range mat. If you're a golfer, you go to the driving range, it's all chewed up. Well, if the profile is all chewed up, these are future sellers potentially, and these are future buyers potentially. Now we filter those out to see movement. We only look at people who move their order around. Boom, we capture it on MBO, and that gives us maybe a little bit more confidence that indeed they are real because there's activity. It's not an order necessarily been sitting there for weeks now or hours. You get the point. Now, you've had moments a while here for price to do this. It could have left from here, could have left from here, but yeah, it's just going sideways pretty much where you might have gotten long. Now, it doesn't matter if you got long here and you're waiting 6 minutes, or you got long here and you're waiting 6 seconds. The market has given it time to use this red dotted line as support and go up. Don't just put your kind of thought on, well, I just got long. No, 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 no. Where was the first kind of area where others could have gotten long? That's what you got to go by, not where you got long. That's how you feel. But the market, first opportunity the market had to get long was kind of like back in here. Get long from where? I'm talking about the red dotted line. That's all. That's the first moment at this price that the market had the opportunity to get long. So if you put yourself back here, you're waiting a long time for price to do what you think it's going to do. I'm sure you didn't, if you got long at this X, I'm sure you didn't say, I'm going to get long and wait 5 minutes and then it's going to go up. That's not what you're thinking. You're not ever thinking, I'm going to wait 5 minutes. You don't want to wait 5 minutes. You're not getting long predicting you're going to wait 5 minutes before it rallies. You pretty much think it's going to rally now or close to now, or you wouldn't get long now. So know where the market had the opportunity to get long, not where you got long. And then say that if I would have gotten long first time the market had an opportunity to get long, you're waiting a while for the price to rally. All right. Yeah, you've got a red laser. Yeah, you've got kind of a choppy chaser, as we call it, meaning some divots in there. But the damn thing isn't rallying. At some point, you don't have to feel impatient, but you do have to ask the question objectively, if it was going to go up, why isn't it? Does that make sense? Like, I think it's going to go up, but why isn't it going up? It's been given time. You can't say, oh, I just got long. I'm giving it another few minutes. You got to assume that the market was back here and the market's had time to use this as support, and it's not rallying yet. Doesn't mean it's not going to rally. It just means you're asking an objective question. You think it's got the all the ingredients for the bread to rise, but it's not rising. Do you begin to question maybe the temperature setting in the oven or something else? Well, you should. Now watch what happens. I want you to specifically pay attention into our chaser, only because we are about the change in information and where we were at and identifying that change. Meaning, you've seen it flicker right there, meaning you see the divots starting to get filled right there, and you see it kind of fill in a little bit. If you look at the numbers down here, they go, oh, I got to take it back and show you a second. I didn't show you these. Take a look at right. There was a moment where it got balanced. Right there. This is small, more buyers than sellers, 295 to 270. That's where I was talking about the divots on the offer side and how this is kind of a clean profile. So there's slightly more buyers than sellers. But watch those two numbers as you're sitting with your long. Do they stay right there? They flashed and went even higher, but do they stay imbalanced? More buyers than sellers. They're balanced. They're balanced. Right there, they changed. Where, Anthony? Right there. Even a couple seconds before there. Let's watch it again. Right there, we're going to go. Just watch those two numbers. Right there. They change and the sellers come in. Then price goes down. Did price go down and then that change? No. That would be good if you're trading the chaser. You need the chaser to give a little lead. Let's back it up again. Right there, we're going to see this all come together. You're going to see this go where the number on the left is going to jump above the number on the right briefly. Tapping, tap, tap, tap right there. It's a little right there. It got above it. It's balanced. It's balanced. It's balanced. It's pretty balanced. It's a little bit above it. And then it flips. Right there, it flipped good. 199 to 300. The whole point is, are you asking yourself better questions before price moves? Because the market had given price plenty of time to go up and it wasn't. The market was showing you a choppy and divots on the offer side. The market showed you more buyers than sellers, but then the market also showed you it flipped. What do you mean it flipped? New information came in, sellers came from somewhere. That's not bullish. Does it mean you have to get short? Yeah, if you're bearish, it does. Does it mean you cover your long? That's up to you. But you see that this is good lead information. A lot of people are watching information without realizing it, that price goes and then their tool adjusts. And that's good if you're trading the tool and using price to get you in and out of the tool and the data from the tool. You need the tool to give you some semblance of comfort or execution, trigger. And there was a change in information based on the chaser, and then price broke. Even though the laser remained red, it disqualifies the position from either taking the position or staying in the position. And I can't say this enough. You can't put yourself in a position to say, but I just got long. What does that mean? You should have more patience than if you would have gotten long back here? Doesn't matter where you got long. It matters where the market would have allowed you to get long. It allowed traders to get long back here at that price, not where you got long, but where it came into that price initially. So from right here on is how long people who are long have been sitting and not getting it to go up. And then a bunch of sellers come in. So just put yourself in a position to stop thinking about how you feel Start thinking about how the market feels.